Welcome back. You're watching Indian Open right here on BloombergQuint Live. Let's take a quick look across Asia, which doesn't seem to be doing a whole lot much this morning except for being in the red. And taking cues from the US equity markets, though, which have also corrected closer to 1% apiece. So Nikkei 225 is down almost 1%. You've got China, which is down about 0.5%, and so is the case with Hang Seng. For SGX Nifty, though, we're muted slightly under, but just about 12 odd points given up in early morning trade. Good morning, Neeraj.
Good morning, Devina. And this was to be anticipated, right? When we shut shop yesterday, Dow futures are up 110 points. They ended in the red. Donald Trump at it again. Yep.
And, the fact that we've actually managed to stay afloat, probably not sink as much as the other equity markets have, probably gives us that much more in terms of a downside risk. That once you start seeing the global equity markets correct, that's the time that we start seeing some amount of profit taking. But we've been talking about how most of these larger banks are placed at critical support levels, and what they do if they reach a point where they actually break down below, or they bounce back, taking support from them.
Crucial support, crucial day today from that perspective.
For banks.
Yeah, for banks for sure.
But let's also take a look at what's been happening in the derivative space. Navneet is joining us with more details on that. Navneet, good morning.
Good morning to both of you. Well, the markets ended flat in a range-bound session yesterday. Of course, we ended off the day's high. So for Nifty futures, if you look at since the time December series has started, we're just 2 sessions into it, but there is unwinding which has started again on both Nifty as well as the Bank Nifty futures. So there you go. Futures have been trading at a premium of about 43 points, 1% unwinding seen. For Bank Nifty as well, which closed off the day's high level, the futures premium closed at 50 points, and there was unwinding to the tune of about 2%. But yesterday, the volatility went up definitely, though the VIX has been at comfortable levels of about 14.2, but the VIX also ended the day in the positive territory with gains of 2%. The put-call ratio fell, and that was on account of higher call writing which came into the system. So 1.44 was the PCR across all series. And if you look at the distribution for this Thursday's expiry, which is scheduled on December 5th, maximum open interest on the call side is at 12,100, and on the put side it is at the 12,000 mark. So the range is quite narrow. 12,000 of course remains a psychological support level, and the resistance will be somewhere about 12,158, which is the recent high that we've seen on the index. In fact, yesterday there was a call writing which came in at the 12,100, and the 12,000 put also saw some addition of about 5 to 6 lakh shares. So the bulls will definitely try to defend that mark of 12,000 if the markets were to scale lower from the current levels. Moving on to the stock futures, then there were a lot of stocks which were active. Keep an eye on Indiabulls Housing, which has been in focus. Long positions were seen on the futures side. Biocon has been in focus. That too ended the day with gains of 1.5%. Long positions were seen there. Yes, banks saw fresh shorting in yesterday's session, and short covering was seen for Bhatia. Lastly, FI data has been quite bearish in the last 2 sessions. In fact, if you look at the cash activity, they've sold nearly 3,600 crore. While on the index futures, remember we started the series by being net long by 31,649 contract. That has come down to nearly 4,000 contracts. Telling you, FIs in the last 2 sessions, they've been unwinding their long positions and adding more of short contracts. With that, it's back to you guys.
Thanks a lot for that, Navneet. So FIs, while the brief respite that we got in the first few days of November, I think that's reversed course now. Biocon and Mylan have just launched a cancer drug in the US. While the Bengaluru-based drug maker has developed the medicine, Mylan will take care of the commercial aspect. Sharad Dubey spoke to Biocon's chairperson and MD on just how big could the market be for the cancer drug. Listen in.
This is the second big launch we're having in the US, the first being pegfilgrastim. And trastuzumab, of course, is a very big product for us and Mylan. And this is an important launch because it's the world's biggest breast cancer biologic drug. And I think this is an important launch for us in the US. If you remember, we were the first company to be approved for biosimilar trastuzumab in 2017, and of course we had to wait for patent expiry before we could launch it in the US. Amgen launched this product ahead of us, and they launched at risk, even though they were one of the latter ones to receive approval. But regardless of that, I think we have actually been able to launch this product with both the formulations, 440 and 150, and 150 being the preferred formulation in the US. So we are very confident that we will have a very successful launch. This is a big market opportunity for Mylan and Biocon, a very profitable opportunity for both companies. And we believe that we will make a major impact in this particular segment.
Ma'am, how is the pricing likely of the drug and how much is your estimated share target?
Well, I think these are questions that are better answered by Mylan, who have the commercial responsibility to market the drug. And it is not appropriate for me to really share data on that front.
And can you give any more details on the drug size and the market? And what's the competitive scenario looking like?
Well, the addressable market is close to $3 billion. And of course, if you look at the global opportunity, it's even larger. I think what this means is that the U.S. stamp of approval itself offers us much larger global opportunities. But I think what is also important for us is the U.S. market itself, which will not have too many competitors. And this makes it a very, very important and attractive market opportunity.
And what's the share of Biocon in terms with this drug, in this partnership with Mylan?
Well, at the moment, obviously, we are just trying to assess the market opportunity. We want to have a major impact. We would like to have a big share of the U.S. market, and these are numbers that we can share in due course.
Well, it'll be interesting, as Darshan said, that the stock could react a bit today, but as we discussed as well on First Word, that because the stock has already had a 16% gain in the last 1 month, remains to be seen how much further can it do in the session today. Though, today's conversations with our guests as well in a few minutes from now would be around what companies that are facing some pressure in the recent past could do as well. And before we get in the top news for the session today, I'm particularly interested in seeing what the telcos do. Yesterday, you could argue that they were in the green, but I would say that it's not the best of days for them, because for that much awaited announcement, and while they started off higher, each of the names came off and ended lower or at the lowest point of the day. Bharti Infratel ended in the red. It's not quite the reaction that you anticipate for such a big bang announcement.
But Neeraj, a personal opinion here, I don't think the market waits for the day the announcement happens. It's the run-up that has already been built in, and we've seen Bharti Airtel, and we've spoken about it, how at least 3 or 4 times it's taken off its previous 52-week high. So there have been instances where Bharti Airtel has actually gone from strength to strength. It's factored most of this in. Bharti Infratel also, while the initial part of the month probably was a little bit subdued, but then you saw those big 10% moves coming into Bharti Infratel also. And Vodafone Idea, the journey is pretty well known.
Agreed.
From 2 rupees to about 6.5, 7 rupees that it already came to.
Yeah, I just wonder though, and we'll take Mayuresh's opinion out here too, that because, if the hike would have been just 30%, which was anticipated and baked in, I would have agreed. But the hike was, well, between 14 to 50%. And therefore, I thought that maybe, just maybe, there could have been some more moves. But yeah, you could be right. Maybe it's by the rumor or by the anticipation, and suddenly the news actually happens.
In fact, let's ask Mayuresh that question. Mayuresh, while obviously the street did see all of these stocks react materially in the run-up in anticipation to these price hikes, on the actual announcement, it was, much left to be desired.
Morning, Devina. Morning, Neeraj. So I think the anticipation was that hikes will come through, and they have taken substantial hikes, no two ways about it. So Neeraj is absolutely right in terms of the quantum of hikes that they've probably taken. And I think it's across operators on a similar note. So I think the question of churn of existing subscribers moving from one network to the other probably remains very, very low at this point of time. Unless Jio probably announces plans which are far lower or at a discount to what the existing incumbents have announced. To that extent, I think there is a risk that the existing incumbents do carry onto their books. But on the other hand, when you're probably talking about the kind of hikes that they've taken and the kind of ARPUs that they've recorded in quarter 2, 128 odd rupees for Bharti, 107 odd for Vodafone Idea, And we're talking about the whole part of their entire database actually having more of a prepaid inclination, which is the case for the industry as a whole. I think it's a sensible move that they needed to cover losses related to the recent Supreme Court hearing. So to that bit, I think the EBITDA growth should be substantial for the existing telecom incumbents. They've also cut down substantially on capex. So if you see Bharti's balance sheets for the first half, it's 8,800 crores they've probably spent, which is exactly half of what they've done for the same half, corresponding half of the previous year. So they're very, very conscious in terms of cutting down on costs, and cash flow should definitely improve with this move. But to answer your point, Devina, I think was a large part of this move gestated in the price. To my opinion, yes. But as numbers start coming out, I think more and more positive connotations can actually start coming through the telecom players as their net debt to EBITDA levels start normalizing over the next few quarters. And as customers and subscribers in general start adjusting to the new plans. So yes, I think it's balance sheet healthy from a medium to long term perspective. From a short-term perspective, I think it's well gestated. I think we would stack it up in this way. I think Reliance with Jio and retail and refining still probably remains number one, Bharti number two, Vodafone Idea number three.
Okay, and lots more stocks to talk about, but let's take it to our research team first before we get Mayuresh's views on some of those. So Amit will join in to speak about the stocks in news. And Shefali will take us through some brokerage notes that have come out in a bunch on State Bank of India, maybe just as a standalone entity or because of the SBI Cards IPO. But Amit, let's start off with you, the stocks in news first.
Firstly, United Spirits, because the board has approved the merger of the company's listed arm Pioneer Distilleries with itself now. The company, that is United Spirits, will issue nearly 10 equity shares for every 47 equity shares of Pioneer. RBL Bank will remain in focus because they have opened their QIP. Now the bank is planning to raise close to 2,000 crore rupees, and the indicative price is around 351 rupees per share, which is at a discount of nearly 6% to yesterday's closing. CG Consumer Electricals, because two investors, firstly the private equity investor, that is Advent International, and second is the Singapore State Investment Company, that is Temasek, are offering to sell nearly 4.5 crore shares, that is 7.2% stake in the company at 240 rupees each. Now the deal is valued at close to 1100 crore rupees, and the investors also have an option to sell additional 1 crore shares in the company. Tata Motors, based on a Bloomberg report which says that the company has won an order to supply nearly 2,300 buses to 5 state transportation companies, and the company, that is Tata Motors, is looking to complete this order by Feb 2020. IFCI, because the company said that they have received bids for the sale of its entire stake in NSE, that is National Stock Exchange. And lastly, ONGC and Oil India, because the India's oil minister in the parliament has said that ONGC is looking to invest close to 1.6 lakh crore rupees, while Oil India is looking to invest close to 1,800 crore rupees in domestic exploration and production over the next 5 years.
Okay, couple of interesting ones. Let's wait and watch how they react, and we'll talk about them with Mayuresh. But before that, Shefali, brokerages on State Bank of India.
Well, yes, there are two brokerages, UBS and Macquarie. So UBS is a more holistic note on a couple of developments with regards to SBI. Macquarie is based on the valuation coming in from SBI cards. So first, starting with UBS, they are maintaining their buy rating and have hiked the target price to 450 versus about 375 rupees a piece earlier. And according to them, the market is not really factoring in the kind of recoveries that State Bank of India can get from the resolution process. But those resolution processes might offset the recent extent to an extent. So there are three potential risks at this point in time, according to them: telecom, NBFCs and mid-sized corporates, and the deposit franchisees and subsidiaries to accrete long-term value. So now, so the subsidiaries add up almost 100 rupees to the total SOTP of State Bank of India. And the other one, Macquarie, has also put out a note, and according to them, in State Bank of India, SBI Cards IPO can raise the target price by about 5%, which is, so right now they are valuing SBI Cards at about 27,500 crores. But if the valuation is indeed around 60,000 crore rupees, then that will add up some 16 rupees to their sum of the total parts valuation. And it will be one of the most expensive financial services firm in India with about 11 times price to book. So that is something that they are watching out for. As of now, they've maintained their neutral rating, target 320, but SBI Cards has a potential to add about 5% to their target price.
Oh, Shefali, thanks so much for that. So those are some stocks that you need to monitor. Mayuresh, a quick question there. Have you done some back of the envelope calculation on what what kind of bump up could the SBI Cards IPO give to State Bank of India? And on back of that, would you be a buyer, tactical buyer in State Bank of India?
So Neeraj, I think if you probably value State Bank and if you take the sum of parts, right, if you take the standalone operations and if I presume what Shefali was just mentioning and the core assumptions of their core banking holding up pretty well, even if I adjust for a core adjusted book value of around 225 odd bucks, give it around 1.2, 1.25 times, I think there is a certain value ascribed of almost 280, 290 bucks for the standalone operations. Now, if I toss in SBI Life, SBI AMC, and the kind of growth that the life insurance players have exhibited, I think SBI Life with the value of new business, its products and the pipeline thereof in terms of the gross written premium, I think the return on embedded value and the EV per embedded value probably still remains on the higher side compared to the other players. So there is a certain amount of value that comes around from the life business as well. AMC again, I think has been growing very, very steadily. So again, AMC has a very small portion in terms of the overall value, close to around 14, 15 odd rupees. And then you come to the other parts of their businesses. So I think the investments that they've probably got, say in NSC, in UTI mutual fund, for example, in their securities arm, I think you can ascribe value for that as well. So I think the cards business, I think the kind of value ascription that you're probably looking at or the fund allocation that they're probably looking at, I think it probably looks substantial at this point of time. Really not accounted for that in terms of the overall sum of parts. So Shefali was rightly mentioning, I think if you probably ascribe the kind of numbers that they're probably looking at, you've definitely got more upside coming through from the other investments, including the card business that can get listed. So there is a potential upside that the card business can also give them, which is strictly not accounted for, at least in my numbers at this point of time. So yes, I think as I've always maintained, I think SBI probably still remains top of the stack for us within the PSU.
All right, watch out for that stock though. It has come off from the recent highs of about 350 odd that it hit just a few days ago. But it's taking a breather of sorts like the rest of the market. Biocon, Mayuresh, and now Mylan launching trastuzumab in the US. This is the second biosimilar. Huge market, $3 billion US market itself. They're already in the EU. And with a 33% profit share deal with Mylan, this could be a real kicker for Biocon.
It would be, Davina, and I think the kind of approvals that they're getting through, because if you look at the business model of Biocon, biologics or biosimilars as we call it, is almost 28% in terms of the top line contribution. Syngene, which is again the research arm, which probably is into CRAMS, accounts for more than 32-33% and that's a very, very lumpy part of the overall business that Biocon probably carries. The third element obviously is the small molecule business. And then again, I think when you're probably looking at specialty APIs, when you're looking at the branded formulations business, I think it's expected to carry on a very decent growth. So I think the recent launch that they've probably done in the US in good stead, and you can expect more probably come through from their biosimilar portfolio. Because as far as I recollect in Q2 post their earnings call, that still maintained a very, very healthy pipeline in terms of biosimilar revenues. So the biologicals division was somewhere around $1 billion in terms of expectation by FY22. So I think that's a steep climb if you probably talk about revenues of around 5,500 crores on a consolidated basis, they reported for FY19. So yes, I think all these approvals hold them in good stead. I think the inflection point comes post FY21 when more drugs probably come into the pipeline and more approvals across different geographies start contributing to the bottom line as well. So yes, there is good growth that can get expected, that one can expect from Biocon. I think the earnings can actually improve drastically over the next 2 to 3 years. And that can be seen drastically in terms of even the return ratios, specifically ROCEs. So yes, there is a significant potential out there in this stock over a longer period of time.
And the stock's moved up about in 3 months rather, it's moved up about 26 odd %. Let's bring in our technical experts, Brijesh Bhatia, research head at Dealmoney Securities. He's joining us right now on the show, along with him, Shrikant, Chouhan, Senior VP of Technical Research at Kotak Securities. Good morning to both of you, gentlemen. I'll start off with you, Brijesh, in terms of what the idea would be on the index right now, considering you might have a softer start as the global markets are not all that sanguine this morning.
Good morning, Devina. So if I just look at the last couple of days, what's slightly muted for Indian market, though yes, we had a slightly global markets being negative yesterday. But I think 12,000 stands out to be a key support zone for a couple of reasons. First, if I just look at the technical structure, price has broken out of the bullish pennant and now being retesting around those levels. Second, if I just look at the derivative structure, 12,000 put has highest OI on weekly or on a monthly as well. If I just look at the weekly average shorting positions for last couple of days, it's been around 37, 38 rupees. And yesterday also, if I look at the average traded price, it was around 37 rupees. So I think till 11,960 or 965 is not broken, these writers might not come into the panic. And I think we are expecting expiry slightly on the higher side around 12,100 or 12,120 on this weekly expiry, which is on the Thursday tomorrow. So I think I would go long on the spot in case it slips around 12,010, 12,028, keeping a target of 12,144 on the upside, and stop loss can be strictly around 11,945.
Okay, that's Brijesh going long on a dip on the index, expecting the weekly options expiry to be somewhere closer to 12,100, 12,120. Do you have a similar view, Shrikant?
Good morning, everybody. I think, see, Nifty is in the range, and if it is opening somewhere close to 12,020, 30 levels, then there we should look for creating some short positions because the market is not holding at higher levels. So with a very short-term perspective, certainly one should look for adding some short positions at current levels close to 12,020, 30 with a stop loss at 12,070 as per spot levels. And on the downside, as Brijesh said, I think 11,970, 960 is going to act as very good support for the market. So there we have to be careful while adding further more short positions. So instead of like adding more, one should look for adding squaring of short positions close to those levels. But in case today, if we see the market is not holding above 11,070, then in that case, certainly we can expect further more fall during the day. So at these levels, we have to be careful. Bank Nifty is also not holding at higher levels, and there are like other stocks which are from the index basket which are not holding at higher levels. So we have to be careful while adding long position if there is any higher opening.
Okay. We come back and talk about your individual stock ideas as well, but onto our special segment, Bloomberg Edge, where Yash Upadhyay tells us about a pattern that the Bloomberg terminal has thrown up on a particular stock. Yash, what's the stock today?
Morning, Devina. So we're looking at IGL, and this one has been a rank outperformer, but we saw some amount of correction coming into the stock at higher levels. But with that, again, we've seen the momentum resume and the trend continuing as the fear and greed indicator that has given a positive signal. The fear and greed indicator, as you know, is a proprietary Bloomberg indicator, and it basically measures the spread between the two weighted moving averages of the price. It oscillates on a zero basis line, so any positive reading would mean that the fear and greed indicator would would turn from red to green, and any negative reading would mean that the fear and greed indicator would change its color from green to red. Now coming back to the price chart of IGL, and we've seen that after a series of large green bars which indicated the positive momentum, we saw that after reaching the mark of almost 438, 440, we saw a quick dip around the levels of almost 400, which is where the gap was after it moved up significantly higher post the tax cut that was announced last month. And now again for the last 5 trading sessions, we've seen the stock move up by almost 4%, and with that the fear and greed indicator in the lower panel that has changed its color once again from red to green, which indicates after these after a very short period of that red bar being triggered is that we are seeing a continuation of the trend, and we will see further higher levels coming into the counter.
And how well has this worked in the past?
So Neeraj, 4 out of the last 5 times that the fear and greed indicator has given a positive call. On an average over the next 1 month period, the stock has managed to return close to around 6%, that 1% being the current one. So as of now, it has 100% rating.
Okay, thanks a lot for that, Yash. We will watch out for this stock as well. Now some stock recommendations. Shrikant, to you first, your ideas for the morning.
See, I think the way there is a very clear-cut structure of distribution at higher levels, we have to be careful, and that is why one should look for adding some short positions on Power Finance Corporation, PFC, which is trading somewhere close to 113, 114 levels. Here we have to keep stop loss at 116 for creating short positions, and we can expect 108 to 106 on the downside after selling short at current levels. The other stock on which we are bullish is Sun Pharma, which is around 440, 441. And Neeraj, if we go through with the overall formation of all these pharma companies, then number of stocks are showing a lot of strength. Sun Pharma has already corrected from the highs of 470 to 440 levels. Here, if we add any long positions, then we have to keep stop loss at 430, and we can again expect 455 to 457 on the higher side.
Was a fundamental pick yesterday as well. Sun Pharma is starting to find favor. Watch out for this one. Brijesh, what about you? Your ideas for the morning?
I would go on long on the mid-cap stocks. I would suggest 3 stocks. First is the AU Bank. If you look at the AU Bank structure, has seen a consolidation, and yes, if you look at the yesterday's, it closed at the highest level of the above the consolidation level. So at around 833, one can take a long bet for the target of around 870 on the momentum side, keeping a stop loss of 805, slightly lower below the consolidation. Second is APL Apollo Tubes. So if I just look at the structure, it is forming higher low structure, and if you look at the recent short-term charts, it taken and supported around 21 days average and trending on the positive side. Most importantly, if I look at the MACD, is given a short-term positive crossover at the momentum breakout. So at around 1613, I would go long for the target of 1730 on the upside, and stop loss can be placed at 1558. My third bet is on the Delta Corp. So if you look at the stock, has seen a strong comeback from around 160, 170 or to around 220 now. Stock has formed the bullish harmonic pattern. Plus, if I just look at the short term, it has broken out of its inverted head and shoulder formation yesterday. So a long bet around 220, keeping a stop loss of 212 on the downside, and momentum target can be around 246. If in case one want to look for 6 months point of view, I think 290 can be also expected on Delta Corp.
Okay, Mayuresh, coming on Bajaj Finance, what does one do now? I mean, while we saw the excitement around the QIP, the stock moved up to about 4,200 plus, now is sub 4,000. What's the call here?
I think you should still continue holding if you're probably holding on to the stock. Our belief here is that in terms of the outperformance that the stock has exhibited in terms of core parameters, top line growth, disbursements have been stellar for this company, even in times where the entire universe has probably degrown or has probably shown some signs of distress. At the same time, when you're probably talking about the asset quality pressures, have not been that significant for Bajaj Finance. So I think the kind of expectations that one lays off, and if one looks at the base effect for this company going ahead as well, there will be some normalization going forward. But again, the access to funds, and because of their better rated quality paper, the cost of borrowings also remains within reach, which means that the NIMs and spreads do not fluctuate in the manner that the other NBFCs probably exhibit. So it's shown far more resilience. It will show far more resilience going forward. The capital raise will definitely help the expansion plans, both in terms of disbursements and expanding their balance sheet. Yes, valuations are definitely on the higher side, but anybody holding on should hold on to a leader like Bajaj Finance.
Okay, hold on to a Bajaj Finance that the stock has come off rapidly over the last few days. In the last 1 month, done absolutely nothing. 2.9% lower actually, but the stock had nonetheless been one of those favorites and had gone up quite substantially post its QIP as well. So that's the 12-month chart, 57% still higher. Adani Group stocks, that's the area of interest of late. And Adani Transmission going from strength to strength. I think yesterday's session saw a high of about 340. And then from there, the stock has come down. But you can see the last 1 month, and in actually the last few days, a big spike has come up into Adani Transmission. Adani Green is the other one, which has shown a similar amount of optimism in terms of the stock price performance. In the last 7 days, it's shown you gains of about 23% odd.
Interesting to see if they continue or not, Devina. Time will tell, but lots of triggers for each of them. And maybe in the pre-open session, it'll be interesting to see their rates as well today.
Yeah, we'll check it out. But for now, let's quickly hop across to see what changes have happened in Asia. The screen has not changed much. Its color is still red, so you've got about almost 1% for Japan lower. Shanghai has improved a bit. Hang Seng has improved materially, in fact, so now down just 0.25%. For the SGX Nifty, we've also recovered a few 7-8 odd points, so 12,088 on the SGX. Nifty 50 opens with a negative bias, marginal, actually flat, so to speak, and so is the Sensex, which is down flat, about 57% points higher this morning. Coming to individual movers on the index, starting off with the gainers then. Tech Mahindra sees a bump up, but remember, these are just the initial ticks. Hero MotoCorp is up 1.6%, SBI at 343, so that's moved up closer to about 1% or so. Cipla is 1.25% higher. Britannia, that's moved up. You've got Tata Motors, 1.2% higher. BPCL is 1.4% higher. Then you've got the likes of an HCL Tech, Power Grid, Bharti Infratel, and HDFC Bank, which is doing okay for itself. Coming down to some of the losers then, GAIL is down about 2%, Hindalco is down 1.3%, Grasim, Maruti, NTPC and Wipro are some of the losers in trade. ICICI Bank sees some profit taking at 509. For the currency, some strength this morning but extremely muted, 71.64 to the dollar is where we are trading at. Probably we'll be watching out for the moves in the currency as we approach the monetary policy announcement.
Biocon is fairly active. Just a couple of stocks I want to mark. Biocon, very volatile, I must say. Just about 2% now, was up 9% as well. The pre-open gimmicks that keep on happening, but starting off positively. And watch out for Magma FinCorp. The last few days, it's been on a bit of a roll, up 5% likely in today's session as well. We'll chat with the management as well. This stock has been very, very active the last few days. Do watch out for this one. We will watch out for Dish TV. The last few days has been rather weak, and maybe, just maybe, there could be some more slide downwards. For now, looks to be stable. Let's revisit some of these stocks once the pre-open rates settle down. There are a couple of brokerage calls that have come in on a Sudarshan Chemicals, for example, so that stock too would be in focus. But let's first get in Yash, who joins in now with the brokerage calls of the day as well. Yash, what are brokerages saying? What's standing out?
Well, the top brokerage call for the day, Neeraj, is IIFL Securities on Sudarshan Chemical. Now, they have initiated coverage on the company with a buy rating and a target price of 500 rupees per share, which indicates a near 28% potential upside from its current market price of 390. They say that the company is well placed to continue its rapid growth in context of the imminent exit of two of the largest players in the industry, which is both BASF and Clariant Chemicals. That apart, the key positives for the company include the fact that its low-cost manufacturing business model, technical capacities, as well as wide product portfolio and growing client relationships are some of the big key positives for the company. That apart, the company is embarking on a capex plan of almost 10,000 crores over the next few years. Half of 1,000 crores of which half of it the company plans to incur in just by the end of FY20. That should result into incremental revenues accruing to almost 4,000 crores with ROCs of nearly 30%. That is another reason why they are extremely positive on the company and expect that the next growth leg to result into a 30% EPS CAGR over FY19 to FY22. Back to you.
Right, that's Sudarshan Chemicals. IIFL initiates coverage. It's got a buy rating on the stock. Yash, thanks very much for joining in with those details. Shrikant, let me get to you. Magma FinCorp, do you track this one? It's been an extremely active stock. You've seen in and day out, the stock's been up about 5%. Today, too, pre-open suggesting an uptick of about 5%.
Yeah, see, like Devina, the stock has fallen vertically from the highs of 144, 145 to almost 30, 35. And it was like a vertical fall. But yes, since last few days, we are seeing very good amount of value-based turnover on the stock. And it is just going up and up since last 4-5 sessions. So while looking at the formation, I think there is this bounce back is going to be is going to extend furthermore from here. We can expect the levels of close to 60, 65 on that side because it's a dead cat bounce after falling vertically. So instead of adding a long position at current levels, if we have any positions, then we should look for exiting from those positions if it comes between 65, 67 levels.
Okay. So exit at about 65, 67 according to Shrikant. Zee is up about 2%. That's the top gainer on the index this morning. Mayuresh, let's talk about this one and what happens here on and what the focus is going to shift to. While obviously the overhang was, out of the system, it just seems like while the focus should be on the operational performance, with the kind of exits and resignations that have happened, there still seems to be some cloud over the stock.
It seems to be the case, Devina. And clearly, I think the operational performance is going to be extremely key for a stock like Zee. I think when you're probably talking about the ad revenue growth for the industry as a whole, it still seems to be very, very sluggish at this point of time. So one can really expect a very slow and sluggish and a gradual improvement in terms of ad revenues picking up. The second element obviously is the subscription growth, and subscription growth has remained extremely steady for this group in general. I think if you probably look in the regional networks and the regional channels, I think the scaling up in terms of both market share as well as subscription addition seems to be pretty strong. The third element obviously is the kind of expenditure that they need on their OTT platform Z5, and that will probably continue in terms of heightened competition from key online players. So the content development on that part and the expenditure in terms of probably expecting the channel to start break even on the OTT front is still going to take some time. But I think it gets offsetted and compensated with the standalone business and the standalone ad revenue and the subscription growth. So I think it will now shift to the operational performance for Zee very, very clearly. But till that point of time, I think it's still going to be a range-bound trade for Zee going forward.
Mayuresh, have you looked at the internet-based businesses, Affle and InfoEdge? I'll probably even throw in an IndiaMart there. Is there any which looks attractive fundamentally at the current valuations?
So Neeraj, I think there is tremendous growth for this business segment going forward, because as we are seeing internet penetration, when you're probably seeing digital marketing, I think that's picking up steam in a substantial manner. So I was just reading one report a couple of weeks back, and the kind of growth that they probably expect globally. I think even if that's not replicated in India, but even if it grows at half the pace that the global growth is expected, I think there is huge potential for these sub-segments. When you probably look at and dissect each of these companies that you probably spoke about, there is reasonable amount of growth, as I said, that can come through. And there is enough spending that is probably coming through, both from the corporate side in terms of understanding the need to be on digital platforms, and digital advertising is going to be the key. Having said that, I think for a stock like InfoEdge, for example, I think the business model still revolves around their recruitment business, which is still the cash cow. What they probably ascribe through their holdings in Zomato, Policy Bazaar, and the unicorn valuations that they are probably getting at this point of time, I think that does add to the SOTP valuations. But again, for stocks like an Affle, IndiaMart, Naukri, I think the valuations probably remain a tad too bit for our comfort. So I think if there is any amount of earnings disappointment, I think these stocks can come crashing down. So I think the valuation comfort is not there with these stocks.
We will watch out for some of these businesses as well. As the 8 minutes have settled down on the pre-open, and Bharti Infratel is at it again. The stock is up about 1.5%. It's arguably one of the most volatile stocks on the Nifty 50 these days, up one day, down the next. The commodity stocks, they've been on expected lines, have come off. If indeed the talks about the trade stress comes out, then you usually see these stocks reacting. And in today's session too, I mean, at least at the end of the pre-open session, Tata Steel, JSW and Hindalco look like starting off low and lower, and Bajaj Finance. One more day of a start which is marginally lower in trade.
Well, we'll see where this ends for Bajaj Finance. 39.39 on the stock, down marginally, just 0.25% though. Let's talk a little bit more about some of these other businesses. And Mayuresh, what are you going to do with a company like Edelweiss, JM Financial, Motilal Oswal?
So again, I think what is surrounding the Karvi episode at this point of time, and again the diversification that all these players have done, I think it is probably a step in the right direction. So again, the diversification should hold out in good stead. But what probably happens in terms of the core business model itself, I think that should probably hold out. So again, I think no direct views on these stocks. But again, the kind of the competition that we're probably seeing in terms of discount brokerages for their core business, the heightened competition in terms of bank brokerages as well, I think that's probably going to take a sting away in terms of the overall revenue growth. So I think no direct views here, sorry for that, but I think there is plenty of competition around in the market for all these players.
Okay, Brijesh, Bhatia, Reliance Industries crossed 1600 yesterday, and then we're now about 1592. On an intraday basis. What would you do with Reliance Industries?
I would take a long bet. I think till 1528 is the key reversal level now. So that it is that levels is not breached. I think I'm expecting 1650, 1660 on the upside. So I would take a long bet in case if 1600 is breached. One can look for an aggressive longs also because in yesterday's session we've seen 1610 and back to around 16 below 1600 levels. So 1600 will play a key psychological levels. One can go long at 1582 or above 1600 and look for 1660 as a target.
Okay, that's on Reliance Industries. But we were just minutes away from market opening. And we tell you all that you need to know to stay ahead and trade today. Oil prices rise the most in a week as prospects of a deep production cut from OPEC and allies rise.
Bajaj Finance challenges the SEBI order asking it to free client shares pledged by Carvi. NSDL returns shares to 90% of Carvi's clients.
United Spirits will merge the listed subsidiary Pioneer Distilleries with itself, and shares of United Spirits will be issued for every 47 shares of Pioneer Distilleries.
Tata Motors wins an order to supply over 2,300 buses to 5 state transportation companies. That is according to a Bloomberg report. It is looking to complete the order by February 2020.
Ujjivan Small Finance Bank gets fully subscribed on the very first day of initial public offering.
Well, that's the other interesting one that you need to monitor in the session, or rather Ujjivan, because remember this whole conversation about whether you're better off buying off the current listed entity because of the math that a brokerage house has put out, and you got to do that math yourself based on the assumptions that you have in order to take advantage of this. Mayuresh, do you have any thoughts here? I mean, this IPO is getting subscribed well. Would you buy the parent as a holding company in the next 5 years? Maybe there will be some merger or shares would be distributed. That whole math that is going around. Would you take action on that?
I think you'll still have to wait for all that, right, Neeraj? So I think whether the merger happens or not, I think it's still going to take a while for that. But if you probably look at the small finance bank statistics at this point of time, I think on most parameters they're probably fulfilling most of the investors' concerns. So in terms of capital adequacy, for example, the tier 1 clearly stands at 18%, which is very, very healthy. When you probably talk about GNPAs, they have come off significantly, so it stands around 0.85, which is very, very good. They've also diversified. So from the microfinance part of their business, which is almost 69, 70 odd percent, the diversification in terms of two-wheelers and other discretionary loans should also probably start propping up their overall advances growth going forward. The only hitch that I probably see is the CASA ratio, which still stands at 11 odd percent, which is languishing probably at that level, but that will show signs of improvement going forward as well. You come to the valuation part as well, and when you probably talk about a price to adjusted book of 2.2 times, it's definitely not cheap, but it's not expensive as well compared to the other private financials at this point of time. How do you probably ascribe and play the overall dynamics here? I think in terms of the merger going forward, again, I think that's going to take time as well. But for the IPO standalone, I think valuations probably still on their side compared to the larger players. But again, as I said, I think we individually need to take a call because I think we don't have a view as far as IPOs are concerned at this point. But these are the statistics that actually I can put on.
Okay. 1.5 minutes left to go for market opening, and the pre-open rates are suggesting a flattish but positive start on the indices. So 12,067 is what you've got, and Nifty Bank has got about 31,920. Brijesh, actually let me take it to you, Shrikant. Let's talk about ICICI Bank. Some bit of profit taking here around levels of 509. Would you go long?
No, I think it is better to stay away because the stock has already rallied to its extreme level and it is into overbought zone. So in case if it falls to, let's say, 490, 485 levels, then it's a very a good entry level for short-term traders. But if there is a medium to long-term view, I mean to say if there is a view of next 3 months, then only one should look for adding long position at current levels. Otherwise, avoid, because there are other stocks. And in fact, HDFC Bank is showing some interesting formation on daily charts. In case HDFC Bank crosses 1290, then in that case we can expect technical breakout, and 1330 or 1350 is not ruled out in that case. Otherwise, just stay away because the overall broader market is just in a range and it is going to spend some more time.
Okay, quickly, 10 seconds, top call of the day.
I think I would like to go with Dr. Reddy also, which is around 2870 levels with a stop loss at 2840, and we can expect 2930, 40 on the higher side.
Okay. Brijesh, 10 seconds. What's your top call of the day?
I would go long on Kotak at 1632, 33, giving a stop loss of 18 and look for target of around 1665 on the upside.
Take a moment to thank you for joining in today. Really appreciate your time. Shrikant and Brijesh, stay on. We'll take in opening thoughts from you. But here's how the markets are starting off this morning. When the Asian markets and the US markets last night ended in the green, we are ended in the red. We're starting off flattish. I mean, you can say that we are marginally in the green, but that's coming off too. And now Okay, all the three key indices, even the Sensex is in the red, but a flattish move in any which ways. The mid cap and the small cap indices should also come up on your screen. About 0.25% higher for the mid caps, the small caps about 0.25% as well. It's not a bad start, I must say, considering what the rest of the Asian pack is doing. Let's see what's leading this. Bring up the heat map, and not too many losers, but what about the gainers? Don't quite see heavyweights. Bharti Airtel about 1% higher, but it's not a heavyweight. Zee, Yes Bank, Infratel, Tata Motors, hardly heavyweights. Okay, SBI has some gains, HDFC has some gains. We were talking about how banks and financials are near some key support levels and might gain. Reliance Industries is lying absolutely flat, but I think it's the absence of losers. Any big cuts are not there, and as a result of which the Sensex is still stable. Let's wait and watch if it corrects further. IndusInd Bank is the top loser. Wipro is down about 1%. Tata Steel is down about 1%. So Tata Steel, JSW Steel, Hindalco, Vedanta, their entire pack is starting off slightly weak in the session today, and you have some weakness for Bajaj Finance. It's very close to 1% lower now is Bajaj Finance. So now it's very close to knocking on the doors of the QIP price of 3,900. You got to keep that at the back of your mind. It's corrected quite a bit already. Let's wait and watch if it corrects further, or does it see some bottom buying at these levels. But almost even Stevens, maybe a bit more red on the large caps. Very quickly, on the broader end of the spectrum as well, a few pockets of strength and a few pockets of weakness. Stocks which were trading at fresh highs in trade yesterday, AstraZeneca, Godfrey and City Union Bank. Save for AstraZeneca, the other two start off marginally lower, especially Godfrey Phillips. It's not a very liquid stock, but starts off lower. AstraZeneca about 1.5% higher. What about the top drags at the mid-cap end of the market? Chouhan Life, which was down about 15% yesterday, starts off marginally higher, but no such luck for Graphite and Mastech. Very flattish moves, but these were amongst the top cuts yesterday in today's session to start off flattish to marginally lower in trade. Devina, what are you spotting?
So we've got more gains coming in for Reliance Naval, which is up about 4.6 odd percent. Then a smaller name, IFCI, which is up 5.7%. Dredging Corp moves up about 2.5% for that one. ITDC moves up about 2.5%. Biocon is up about 2.5%. No big bang move on the back of that news. Gati 3% higher. Syngene moves up. Magma FinCorp continues to do well, but not a 5% gain. 1.73% is what it's got. Shipping Corporation reverses some of those losses over the last few days. Wouldn't say losses, probably profit taking, but it's come back into the green this morning. The likes of a Prestige Estates is up 1.5%. UCO Bank, Equitas are some of the other names that are trading with gains this morning. Info Edge 2, along with a Gujarat Pipavav and a BHEL, is doing fine for itself. Coming down to the losers, Vodafone Idea gives back 5% now, lower for Vodafone Idea. You've got the likes of an Eros International, which is lower by 3.5%. And Magma FinCorp actually now moves into the red. Then you've got HCC, give some profit taking, further profit taking. Your Motherson Sumi, that's down in the red. Dish TV is down 1.5%. IDBI Bank's down 1.5%. Tata Communications, JSPL, and some of the other metal names are looking weak. But it's not a very drastic difference in terms of the advances versus the declines. It's actually pretty even keel. So you've got a decent split out there. So 533 stocks advance and 515 stocks decline. That's what you've got in terms of the market opening at this point. But I guess quick opening thoughts. Shrikant, any one stock that is on your radar that you've probably not taken a position in, but you're looking and waiting out for the right levels to come?
I think, see, already Bata has corrected to its important support area. It is rebounding from current levels, so it's a buy at this price with a stop loss at 1600 on the downside, which is little bigger stop loss, but we can expect close to 1720, 1730 sort of levels. But the stock, if we like really, on which we have a very close track is Bajaj Finance, which is trading around some 3800 levels and 3900 levels. But in case if it falls to 3800 levels, then it's a very strong bet, because then the stock will complete its important corrective pattern close to 3800 levels, and from there again we can expect very strong bounce back. So Bajaj Finance is a very strong bet if it falls to 3800 levels.
Brijesh, somebody long on Bharti Airtel yesterday. Continue with the long positions or take profits here?
I think I will continue with the long, because stock has seen a good upside momentum after a consolidation zone. So I think more upside can be on cards. Possibly we might see a 453 as a support zone and then revised upside momentum towards 490 again.
watch out for these names as well. Shrikant, Brijesh, thanks so much, gentlemen, for joining in today and giving us your perspectives. Really appreciate your time. Rajesh Kothari, Managing Director at AlfAccurate Advisors, joins us on the show as well. Rajesh, good having you. Thanks much for joining in. Rajesh, are you recalibrating your portfolio by maybe chipping off some of the profits from the highly valued stocks in the consumer end and starting to buy some of the quality stocks which might be available at good valuations right now? Or are you sticking to the stance that has worked for you in the recent past?
Well, I think it is a combination of both. So, if you look at the last 18-24 months journey for the market, it is a significantly polarized market. While on one hand, probably Nifty is all-time high, the mid-cap index is about 20% down from its peak, and small-cap index is down about 40% from its peak. So the value started emerging in this basket, mid and small-cap companies. There are many good quality names. Few of the companies probably which we have bought very recently in last 2-3 months, they are already up probably 10, 15, 20, 30% from their prices. So I think market is now probably becoming more broad-based participation, which has started happening in last, I would say, 3-4 months. So if you see the small cap index, mid cap index, Nifty, BSE 500, they all are up about close to 8% during last 4 months. So probably there are early signs of broader market participation rather than 10-15 stocks driving the market at all-time high.
So while obviously the polarization theme is starting to turn, but does that also mean that there'll be a shift in terms of sectoral weightages and sectoral preferences from financials to other sectors, or that still holds?
Well, I think it is probably nothing to do much on the sector. It is more to do with the the good companies, good fundamentals, irrespective of the sector and irrespective of the market cap. So for example, one of the largest bearing company in January 2018 to December 2018, if you plot the chart of that company, it was down 50% without any reason, just because there was a recategorization of market cap. But now it is back to its 52-week high. Similarly, if you look at one MNC capital goods company, which declined probably about 30% in the interim, but now it's probably at lifetime high. So it has nothing to do with the sector. This entire panic which was there in that basket, mid and small cap, it happened irrespective of the fundamentals of the company. Many good companies, cash-rich balance sheet, zero pledge, zero promoters issues, no such issues. But the stocks were hammered, and I think we are seeing a smart rally, in that basket, irrespective of the market cap. Having said that, there are a number of opportunities available even today, with the same characters of the companies, high quality companies, great management, very sound track record, and they are still probably trading at very attractive valuation. So the entire valuation gap, what has happened between few large names versus the entire market, I would say even within large caps there are many names, within mid caps there are many names, within small cap there are many names. So I think as probably the this broader participation which has already started, we would see more such names which is registering strong gains from the stock market perspective.
Okay. No, the reason why I asked was obviously some of the larger names are primarily from the financial space, which have actually done well. And we were talking about how the theme of corporate-facing banks has worked really well so far up until now. Does that change? Does the overcrowded trade, the so-called overcrowded trade, turn itself? I mean, look at manufacturing as a segment. Look at commodities like metals, cement. Do you take a play on these kind of names?
So I think corporate banks will continue to do well because the profit growth is very, very strong. So for the right reason, that sector has done well. So when there is a earnings growth, you need to see the mirroring of that earnings growth when you look at from the stock market perspective. So over next probably 12, 18, 24 months, this trend of corporate banks, these macro things which are in their favor for the large private sector corporate banks in terms of the market share, in terms of availability of funding, in terms of their ability to now probably select the high quality customer, it means a superior risk adjusted ROA, and that's what is very, very important. So yes, you might see some short-term correction, but overall we continue to like those names as well. But then there are opportunities within NBFC as well. So if you look at the NBFC space, there are many select NBFC names. They're already probably up 30, 35, 40% from their very recent lows. Because those companies, they could raise money either from CP market or from the NCDs or, you know, variety of such instruments, and the fear of NPAs or fear of one-time write-offs probably is behind. So there are many good even NBFC companies which are probably will continue to see, you know, good traction from the business perspective. Many of these NBFCs have decided to grow at 0% in last 18 months, which is actually a very good thing to do because they decided to consolidate their balance sheet. And as the economy becomes more moderate, become more normalized, this NBFC will also start seeing good growth. So I think even not only private sector corporate banks, but select NBFC, and you know, please put this select on a very bold terms, the select NBFC also will you know, start seeing the good loan book growth and good ROA on their balance sheet.
So you are betting on the lending financials as well. I just wanted to ask you on the other side of that financial business, Rajesh, do the capital market exposed companies, and I'm leaving out the asset management companies out here because they have been discussed to death, the non-asset management companies, do they form a part of a screen which you would consider, especially on the back of the Karvi issue as well, when everybody now starts saying that the flight towards the high quality established names might only gather more steam? Would you buy into any of these businesses?
So, you know, let's assume, for example, the housing finance companies. There are companies, if you look at this space very closely, and if you put the simple filter of capital adequacy ratio, which is something which is very, very important, right? And if you find the housing finance company with a 20%, 25% capital adequacy ratio, with a ROE of 17 to 18% in last 10 years or last 5 years, and who has the ability to raise money successfully despite very challenging times, then I would pick that NBFC as well. I would pick that housing finance company as well, because their underlying business is very, very strong. Their capital adequacy ratios are very, very strong. Their NPL level, that both gross and net NPL level, is below 3%. And then suddenly, if you look at the valuation, these housing finance companies right now trading at probably you know, low of last 8 years price to book. You know, probably is trading at closer to one-time price to book with a 18% ROE for last 5, 8, 10 years, and with a capital adequacy ratio of 25%. But this NBFC may not have grown in last 18, 24 months for right reasons. So I would pick even this NBFC because you are buying very strong ROA, very strong ROE, with a great balance sheet, right, really strong corporate governance, good management, and getting it probably one-time price to book. From here, you can't lose anything. So probably after 1 year, again, if it goes back to his last 5 years average price to book of 2.5 times,
you made money.
Probably it becomes multi-bagger.
Sure, I get your point. No, but I was trying to ask you if you would buy into the brokerage businesses, capital mark, or a wealth management business, not strictly an asset management company. So just to explain my point, I'm leaving out an HDFC, AMC, and RNAM, and I'm trying to figure out if businesses like Motilal Oswal, Edelweiss, JM Financial, MK Financial Services, or for that matter even an IIFL Wealth, which is not strictly a brokerage business but not an AMC business purely. So capital markets exposed businesses, do you believe there is merit in trying to look them up?
Yeah, there is a, you know, one is to keep evaluating, you know, because the companies which you have mentioned all are good management, you know, good balance sheet, overall good corporate governance. So it all about the kind of risk which you want to take, because when you take these businesses like broking business, the linkage to capital market is very, very high compared to the names which I was mentioning on the NBFC side, like housing finance companies, you know, where the linkage to capital market, you know, probably there is no linkage at all. Also the few names which you have mentioned, they are like combo. So they have a NBFC, they have a securities business, they have wealth management, they have investment banking. So then it becomes like, you know, sum of parts kind of evaluation. So every company is different, you know, few companies are combo, few companies are pure wealth, and few companies, you know, are basically into securities business only. Whereas right now we are focusing more on NBFC side of the space, the lending side of the space, because housing finance as a macro opportunity is very big. It keeps growing at 10, 15, 18, 20%. And there if you are getting at one-time price to book with 18% ROE, probably it is cheaper than buying the business which you just mentioned, which are trading probably at similar ROE but at a higher valuations and with a higher risk because you are linked to capital market. So we keep evaluating all the names what you mentioned, but right now our preference is more towards NBFC side.
Okay, so is that your top favorite, NBFCs, or do you have a theme that is really strong where you would recommend, shifting the portfolio or probably having a slightly larger weightage in the current scheme of things?
So it is a very selective thing. It is just not that just only top down. As I said, it is more about a combination of top down and bottom up. The weightage is right now in our banking and finance in our portfolio is at around 28 to 30%, and we would like to keep it at that.
Okay, Rajesh, pleasure talking to you. Love the focus that you have out there, and hopefully it pays rich dividend for your clients as well. Thanks so much for taking the time out and speaking to us today.
Thank you.
That's the view from Rajesh Kothari of AlfAccurate. The market's lying absolutely flat. The banks have corrected a little bit. So now are they close to the support levels from where they will bounce back? That the next few hours will say. We'll of course keep on monitoring that. For now, we slip into a break. And coming up on the other side, we discuss business outlook with Dilip Piramal of VIP Industries and Manish Jaiswal of Magma FinCorp.